Okay, the GDP numbers for FY21 have been announced, and the surprise is positive. They have come in a little better than what the street was expecting. The street was prepared for a minus 8%, a contraction of GDP by 8%, but GDP has actually contracted by 7.5%. So to that extent, 7.3%. To that extent, it's a much more welcome number than any of them forecast. Likewise, the GDP for the Jan-March quarter, the CNBC Tv18 poll said plus 0.9. It has come in at 1.6. So that's a far better number than most economists had forecast. That's a huge positive. I'm still trying to get more details. Okay, the GVA has come in at minus 6.2. The CNBC TV18 poll was minus 6.5. So the economy has not contracted as much as we thought, which is a positive. So both the GVA and the GDP are positive surprises, and that's very important. GDP, as I told you, minus 7.3 compared to CNBC TV18 poll of minus 8%. I don't think it's worth reading now the current prices. At current prices, the GVA at basic prices has come in at minus 3%. That is important, and the GDP at current prices is minus 3% as well. Now, these are important at current prices. We have a GDP of 197 trillion compared to 203 trillion last year, or rather in FY20. Those are important, but the GDP number in real terms is more important. Let me see if we can get any of the Q4 numbers as well. Maybe I want to read the provisional GVA estimates for the full year. The full year agriculture has come in at 3.6%, more or less in line with what the street was expecting. I think we got a 3.5 or a 3% expectation for the full year. Mining and quarrying is minus 8.5, manufacturing is minus 7.2, and electricity is the positive number coming in at plus 1.9. Trade construction is minus 8.6. That's contracted as much as GDP. What has contracted most is trade, hotels, transport, communication and services. Should we be surprised? Hotels not allowed to work for a better part of the year. So all contact-driven services have done badly. Trade, hotels, transport, that is a minus 18.2. So services has been the biggest laggard. Financial sector, minus 1.5. And public administration, largely services that the government looks into, public administration, defense and other services, minus 4.6. So that gives us a GVA of minus 6.2. Okay, let's get to let's come to the Q4 numbers. Are we getting 1 minute? That's the GVA at current prices. Do we have for Q4? Okay. Yes, we do. Q4, the agriculture has grown by 3.1%. Okay, Q4, the GVA has actually grown by 3.7%, which is better than the CNBC TV18 estimate of 3%. So GVA for the fourth quarter, 3.7%. The GVA for the full year has contracted by 6.2%. Just remember those numbers. Agriculture, 3.1% growth. Then mining, minus 5.7. Manufacturing has done very well. That's a plus 6.9 for manufacturing. And 1 minute. Electricity and other utilities, plus 9.1. Very good growth. Construction is up 14.5. Construction has done exceptionally well. I don't think anybody gave us a 14.5. If I remember right, Ekta's poll threw up a number of 9.5, and we were still higher than many people's guesses. Then minus 2.3 is trade, hotels, transport and communication. Financial sector is a growth of 5.4%. Public administration, a growth of 2.3%. I will come to the expenditure-based numbers in just a minute, but we have our experts joining us. So let me go over to all of them. Joining me now is Upasana Bharadwaj, Senior Economist at Kotak Mahindra Bank, Sameer Narang, Chief Economist at Bank of Baroda, and Anubhuti Sahai, the South Asia and Economic Research Head, India at Standard Chartered Bank. Ladies and Sameer, thank you very much for joining me. Well, let me start with Upasana. Upasana, is this a pleasant surprise for you? The full year contraction is 6.2 as far as GVA is concerned and minus 7.3 for GDP.
Yes, Lata, we had retained the CSO's estimates of about minus 8% GDP and minus 6.5% GVA. So this is marginally better than what we were anticipating. But yes, there were the first 2 months had shown a reasonable pickup in activity, which was suggesting that the momentum is positive. So to that extent, there's not much of a surprise. But yes, in terms of numbers, I would say it's a good surprise.
Okay. Sameer, what are your thoughts? And does this kind of change the view on the coming year as well, since the base is higher than we thought? 197 trillion in in current prices, and well, where is the number? 135 trillion as far as real GDP is concerned.
No, so Lata, I think if you look at some of the other indicators which are also released today, particularly the tax collection data, the indirect tax collection has actually shown a very healthy surprise on the positive side, led by across the board positive surprise, be it excise, be it customs, and the GST collection. So all in all, my sense is that the economy has or had fared a lot better in Q4 after you get a sense of these numbers, because the beat that I see is across the sectors from where most of us were looking at growth in Q4. So this also bodes well for hopefully once the unlock happens, and it gives a pointer that perhaps economic activity and the formalization of economy that we've seen in the last 1 year will bode well for tax collections, government spending, and lower fiscal deficit, because even the fiscal deficit number is a tad bit lower than what we had projected in the revised estimates as well.
So are you saying that in spite of this higher base, you are actually likely to upgrade your numbers?
No, I think, Lata, it's too early. We just, entering the June month, and we are still in a lockdown. So my sense, it's too early. But perhaps these numbers also suggest that we perhaps don't need to be so pessimistic about how things may pan out once the unlock starts happening, perhaps from July onwards.
Okay, I can educate you all about 3 more numbers. The private final consumption expenditure for the full year is down by 10%. Government final consumption expenditure is up by 2.9%. Capital formation is down by 10.8%. Anubhuti, your thoughts?
Yeah, so Lata, on the quarterly GDP number, of course, it is higher than our estimate of around 2.5%, especially if I talk about GVA. GDP